Talk stocks in Nigeria. The market bullish yesterday, 0.12% in the green zone. That's the Nigeria's all-share index. Yep, 64,267 points is where it closed. 330 million as far as the volume is concerned. Market cap approaching 35 trillion naira. Have people, if you aren't in the market, have you missed out? Olumide Sole, he's a Sub-Saharan African Banking Research Analyst with Vetiva Capital Management. He joins us to talk stocks. Olumide, you're very welcome. Good morning to you. So what have you made of the activity in the NGX recently?
Thank you for having me. Definitely for the activities, we have seen stocks rally significantly, where we even have some stocks year to date above 100%. Gains they have made recently, and it's on the back of majorly on the policy reforms that the new administration has implemented, and we expect that to even continue to drive more bullish sentiment in the market going forward.
Yeah. Market is up, I think it's about 25% year to date, and we're just in August. Do you see more upside?
Yes, there's still more upside, even at that. One would have thought that maybe it's time for it to get out of the market. But even at that, there's still more upside because there are some events that will likely still drive the market, such as earnings. We have just seen a few number of companies' earnings recently. We're still expecting more and more will still come out, which will definitely drive in bullish sentiment in the market. And also interim dividend declaration. We're still expecting some companies to declare interim dividends. So if this dividend declaration is above or in line with investors' expectation, we'll likely see the market rally significantly going forward. And also, final dividend declaration towards the end of the year is another driver. So these are catalysts that will likely drive the bullish performance of the sector.
For anyone watching this right now and asking themselves, okay, I want to hop into the market because, okay, you've already said there's more upside, so there's more gains to be made.
Yes.
Well, what should you be asking yourself before you hop in? Risk assessment or what?
Yes, first you ask yourself, what's your risk appetite? Are you someone that wants, like, you don't care losing money, or if you lose money, as long as you make more money, so you get your risk appetite, is it high, is it low?
Yeah.
That's one. Also, you also check the valuations of the companies you are looking to invest in, their business model, how they make money. Is it something that the economic cycle can affect, or what's currently going on?
Yeah.
Or is it bullish for the companies or stocks you are looking at, or is it bearish for the stocks or companies you are looking at? Also, you also check the dividends you are looking to earn. Dividends are also factors because in the event that maybe the stock didn't appreciate as much as you want,
you can fall back on dividend.
So those are.
You've mentioned dividends. Can you? Inflation is what, 22.7 or so, right, year on year.
Yes.
Between capital appreciation and dividend yield, put those two together, can you beat inflation in Nigeria?
Yes, definitely.
You can?
Definitely, yes. I just mentioned that some stocks have done over 100%.
Yeah.
So definitely, just imagine you bought that stock maybe at the beginning of this year, or even, let's say, 1 year back from now, you have 100% plus dividend. So that's just 100% alone has beat inflation in Nigeria. Inflation is around 22, and it's likely to even go up. So let's say inflation highest at 30%, and you made 100% capital appreciation plus, let me say, 5% or 9% dividend, depending on the stock you buy. So definitely you have beat inflation.
What's a good complement for the stock market? Is fixed income and the money markets, as far as a well-rounded portfolio is concerned, what do you make of that complement?
Definitely, yeah. Fixed income definitely fits into as a complement for the stock market, because generally, if you see when like the yields in the fixed income market, they are kind of negatively correlated with the stock market. So when we see yields go up, we tend to see stock prices go down. So they kind of it serves as a complement. So if you have a mix of both, it will definitely help to balance your portfolio and help your portfolio to stay stronger. And also for people with less fixed appetite, you can just go with fixed income, where you are looking not to lose your capital and things like that. Fixed income can give you some sort of guarantee compared to equity.
Equities, which is more risky.
More risky, yeah.
All right, look, you're a Sub-Saharan African research analyst. So let's talk about banks, at least the banking sector in Nigeria, which I think has been leading the way on the NGX. Is that still healthy?
Yeah, it's very, very healthy, yeah, because the policy reforms, especially naira devaluation, has kind of provided these banks with they have boosted banks' valuation because the majority of banks in our coverage have net foreign currency asset position. That means their assets in foreign currency are more than their liabilities in foreign currency. So definitely that means at the end of the day, when they are reporting earnings, to recognize those revaluation gains into their profit or loss account. So definitely that will boost the earnings of this company. We have seen a few numbers of earnings. We've seen FCMB, we've seen Fidelity, we've seen First Bank, and most of them reported triple-digit growth in bottom line. That's very, very impressive. And it's majorly on the back of this Naira devaluation. So as a result of that, we have seen the stock prices of these stocks skyrocket. FCMB, 1 year to date, returns above 90%. Fidelity, same.
That's good. Oil and gas. I want to quickly ask you about Downstream. There's been so much focus on, refineries and fuel subsidies and all this stuff. What about the stocks in the downstream sector?
The downstream sector, yes, we have seen they have also been very, very impressive, and it's majorly on the removal of subsidy. Now, players in that sector can charge a price that would definitely give them profits, more profits. So definitely, we are seeing their earnings going very, very, very impressive on the back of the fuel subsidy removal. And based on that, and looking at the whole terrain, the fuel subsidy removal will likely be sustained, and which means that that profit margin will also be sustained
for those companies.
So based on that, the evaluations are also
okay. Almost out of time, but I really want to ask you about consumer goods. If you can, just very quickly, the consumer goods sector. It looks like inflation is still the challenge there. What do you make of that sector, consumer goods?
Yes, we have seen inflation biting really hard for the consumer goods, and we have seen as a result of that some players in that sector have started to increase price, started to adjust their price up gradually. And not just that, we have seen also their operating costs also going up and up like that based on the inflationary environment we are currently in. But overall, the consumer goods sector, we can say it's sort of mixed sentiment, where we see some players record losses as a result of even now devaluation, and also some players were able to weather the storm or avoid such scenarios by the different strategies which they adopted. So as a result of that, some players are still reporting profit, just like Boa Foods and some other.
We just had the MD of Boa Foods right before you. Hey, great stuff. Olumide Sole, Sub-Saharan African Banking Research Analyst, Vetiva Capital Management. Thank you so much for joining us. Appreciate it.